Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now it's FX Tuesdays and today I want to talk about oil prices and the Canadian dollar, or as we all better know it, the Loonie. Now oil prices are a key Canadian export and one key driver of the Loonie. Here, prices have crept higher in recent days. On the demand side, reports of gradually easing COVID restrictions in China, most notably with Shanghai set to ease the most acute lockdowns later this week, mean global oil demand may be set to rise a little bit higher. On the supply side, several media outlets reported overnight that EU leaders had agreed a deal on placing an embargo on Russian oil, including refined products, though it would crucially allow an exemption for crude oil delivery by pipeline. The EU president said it would restrict more than two-thirds of oil imports from Russia, and while the measures are arguably watered down from initial proposals, they do add to upward momentum in oil prices. What you can see on my screen is that Brent oil has crossed above $120 per barrel, and WTI oil is now just about $3 away from our own expectations of $120 there as well. Now, why does all of this matter for the Canadian dollar? Oil is a key export commodity, and like other commodity currencies, strong prices have been one key source of support for the currency. Indeed, data released yesterday showed that Canada recorded a positive current account surplus of about 5 billion Canadian dollars, which was the widest since 2008. Unsurprisingly, that led to Canadian dollar strength of about 0.5%, specifically just after this one data release alone. Now for the Loonie though, we do see the positive case as being more than about oil prices alone. Long-time listeners will know that we see relative interest rate differentials as a key driver of currency markets, and this is where several commodity currencies, including the Canadian dollar, also face significant support. The Bank of Canada is scheduled to meet tomorrow to set policy rates, and markets are already looking for a 50 basis point rate hike at both its June and its July policy meetings, matching expectations of the US Fed. Now, this is key because it comes at a time when rising US interest rate expectations have dominated the narrative, and what it means is that the Canadian dollar faces sufficient support from its own policy rate hikes as well. This is what we see as a second source of support. Finally, both of these drivers are coming at a time when the US dollar appears to have formed a near-term peak. The DXY dollar index is still up about 5.7% year to date, but it is now down about 3% from its early May peak as the focus shifts away from how far the Fed hikes alone to how much other major central banks, including Europe's ECB, and also those of key commodity exporters like the Bank of Canada, end up hiking alongside. Now, easing dollar headwinds are likely to allow more room for the Canadian dollar to gain as well. Now, all of that, of course, from a fundamental perspective, but from a shorter-term technical perspective, we are bullish on the Canadian dollar as well, and hence bearish on the dollar-CAD currency pair. The pair appears to be in a short-term downtrend and did break below technical support at 1.276 a few days ago. The pair now faces much stronger support at 1.265, which coincides with the 200-day moving average, and hence is likely to wait a catalyst, most probably in the form of tomorrow's central bank policy meeting. A hawkish decision or any other factor that helps the dollar-CAD pair break below this key technical level would likely mean the pair goes on towards 1.24. So, clearly a currency that's in the news and faces several key events in the days ahead. But we'll take a pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.